This is the SHIB coin 1 month overview reading for the month of March 2024. It's currently January 30th, 2024, 2:34 p.m. Eastern Time. SHIB coin at the time of this reading is 0.00009183. That's 5 zeros after the decimal point, followed by a 9183, and that's USD. The shuffle file for the SHIB coin March reading was created on January 8th, 2024 at 8:54 p.m. Eastern Time. That's this video here in the lower left corner. So the overall theme and behavior for SHIB coin in March is a rally into a key resistance on a 1-year chart scale, and from that resistance we decline with consecutively lower spikes up on the way down. Those spikes up on the way down will usually meet moving averages as their resistance, and the moving averages is usually in bearish formation. It's not always the case, but this is usually what we see with the strife card. And it's crossed, however, with a big move to the upside that starts out of a decline and goes from the bottom of a range all the way to the top of a range. What I'm picking up on a lot of March readings, especially the cryptos, is a big move towards the end of the month, which I'll talk about as we progress through the reading. Behavior around the highest high, we have a U-shaped dip that forms near the intersection of two perpendicular diagonal trend lines. So we go from a peak to a trough to a peak. Often you'll see the trough is the low on a 1 month, but not always. You'll see two peaks though, and then behavior around the lowest low. Within a period of volatility, there'll be a fast sudden move higher marking the end of that volatility. Likely that fast sudden move higher is what will take us, like it will be off of the low most likely. Either that or nearby, but within a period of volatility. Now, if you've never seen one of these 1 month SO meta-analysis pattern recognition readings, it's important to understand the way that these are set up is that each card in these two rows going left to right across the screen, each card is numbered for the date of the day of the month that it represents. And what's important to understand is that not each card's energy will necessarily line up perfectly with 1 day of time. So there will be some, I do a lot of 1 months, there will be some 1 months where you have to give it plus or minus a day here or there for wiggle room. In cases where that happens, it's important to follow the sequence of events of the chart behavior as outlined by the prediction, because that will remain accurate even when it's plus or minus a day here or there, and you'll be able to stay on track in that regard. For the most part, these are like right to the day accurate though. Never trade like I'm right all the time. It might be tempting. You will regret it. And with that said, guys, before we go any further, I want to make sure everybody's aware. First off, we're going to get into the day-by-day chart behavior, as well as the timing of the highs and the lows. And then at the very end of the reading, the highest highs, the timing of that, and the timing of the lowest lows. All of that after this. The whole purpose of the channel is to transmute some of the competitive energy of the stock market into goodwill. We do that by following the rule of karma for the channel. You go to the resources tab of our website, Tarot for Traders, and 5% of the profits from every profitable trade utilizing this information should be donated forward to one of these charities, or pick a charity of your choosing as long as you're paying 5% forward, and then 5% should be sent back to the channel through one of these links. If you're international, you can use Wise or you can use YouTube tips. And that leaves you at 90%. Make sure to spend that 90% out of love. As long as you follow those rules, you follow the rule of karma for the channel, the universe considers you an angel investor. It's going to send it back to you tenfold for following through. Blessings to all my angel investors. Let's get back into it. All right, guys, so on the first, we have this rally on a multi-day scale that's going to stand out, and we meet a key resistance here on the first. I'd say the first second, we need a key resistance. Probably on the first, we might see it again on the second, but first, second, we see key resistance on a multi-day scale. And it's very likely we had a high here with this cross. If we end up having a high here, it's due to a cross-reading congruency, and overall, this is supposed to be a pretty bullish month, so I would say there's probably a February high there. And then we go higher still probably here in the early part of March. I'll talk about the price levels in a lot more detail in the paid version. So there's this rally here that offers, we go from out of a decline from the bottom of a range all the way to the top of a range. So we probably rally early, decline around the cusp of the first second, and then out of a period of volatility from the bottom of a range all the way to the top of a range. There's just a notable move higher, taking us to another prominent peak on a 1 month scale there, midday on the second. There's also in that period of volatility there on the second be a sharp drop that'll stand out. And there's a trade opportunity, a swing trade opportunity on the first and on the second that we'll talk about in more detail in the paid version. On the third, we have erratic behavior back and forth through the same price level. In the midst of that erratic behavior, we're going to revisit a crest that was recently a past opportunity. It's likely going to be like, again, one of these peaks here on the first, second. On the fourth, we have a brief peak that's easily missed, followed by a decline through multiple support levels. And there's a swing trade opportunity there as well. On the fifth, a swing trade opportunity and a big move to the upside, reaching for a distant resistance on a multi-day scale. And it looks like we have another prominent peak on a 1 month scale on the cusp of the 5th, 6th, after a really big move starting on the 5th and taking us into the early morning on the 6th. Out of that prominent peak on a 1 month scale, though, there is a significant decline. Actually, it looks like there might be a sharp drop around the cusp of the 5th, 6th, and then another move back to that prominent high on a 1 month scale. That would be followed by bearish price swings and a sharp drop on a multi-day scale again there on the 6th. On the 7th, we have an intentional fake out or shake out. So some of the market makers, or the people with the large scale amounts of SHIB coin, somebody's doing something intentionally for the purpose of creating rash decisions on the part of the little guy, the smaller investor. So be mindful of that. Be very, very careful on the 8th. It looks like that move is probably, it looks like we're trying to establish support. It's a notable move to the downside. Okay, so matter of fact, the devil card is a notable move to the upside. There's trade opportunity there around key resistance I'll talk about later on. And then on the 8th, the reason why it's a fake out, it's to the upside. And then on the 8th, we have another sharp decline, taking us into a trough, prominent trough on a 1 month scale there on the 9th. Fast and move higher out of that trough, taking us to a peak. There's probably another move from the bottom of a range all the way to the top of a range there on the 9th, out of that trough, taking us to another prominent peak on a 1 month scale. And then we're bound by a range on the 10th. And it looks like it's a range to the downside. taking us into another trough after a decline through multiple support levels through the 11th, into another prominent trough on a 1 month scale there, early afternoon on the 11th. Another prominent trough on the 12th, and the Magus card indicates a pretty opportune kind of beneficial price move as far as like a trade that might be set up. Looks like there's a lot of volatility there, lots of volatility there, and that looks like a pretty good cash out opportunity. A lot of the readings are right around the 12th, 13th, 14th have a unicursal hexagram energy, so I'd be very, very careful. There's likely a prominent peak there on the 13th, and then we're on the cusp of the 12th, 13th, and then a significant decline. We'll probably move higher through key resistance, stay above it briefly, break back down through the same price level shortly thereafter with a full retracement into another prominent trough on the 14th. Multiple failed attempts to break through key resistance on the 14th, and then a pretty mixed day on the 15th. We have a U-shape, we have a sideways S formation within a channel, which is a decline from a resistance to a support, a return all the way back to the original resistance, and then another decline from that resistance back to that support, creating a sideways S formation within a channel. There's a cross-reading congruency there. I'll talk about it in more detail as well in the paid version. Now, before we go any further, let's take a look at January and see how we're doing. The January reading was created October 25th, 2023 at 2:11 p.m. Eastern Time. So overall, we have multiple failed attempts to break through key resistance and a significant market failure. Looks like it's combined with a brief peak that's easily missed, followed by a decline through multiple support levels. So we have this brief peak that's easily missed. It was a one-day peak, brief peak that's easily missed, followed by a decline with multiple failed attempts to break through key resistance on the way down. And this would be key resistance in this case. Sort of like that, right? And then we went through multiple support levels on the way down. This is pretty accurate. Also, that ruin indicating significant market failure. It is a pretty big move to the downside thus far. We had highs here on the 2nd. We nailed that high. Well, we have it for the 2nd, 3rd, and we nailed that. There's a high there on the 2nd, 3rd. Then we have a lowest low thus far on the 4th, or lowest low on the 4th, I should say. And right here on the 3rd, we had this big move all the way down to a lowest low on an intraday scale. And then if you look at it like this, it's the lowest low thus far here as well. So that was pretty solid. We went into peaks around the 8th, 9th. 8th, 9th, there's a peak. And then another one on the 10th, 11th, 12th, somewhere around there. And it looks like it ended up being on the 11th. We had the 11th circled. Followed by sharp decline. This is like unicursal hexagram energy that I have circled here, and you can see how we went pretty far down there, from all the way from the highs all the way back down to close to where the lowest lows are, and that took place on the 19th. We have the decline taking place and ending around the 18th, 19th, and you can see 18th, 19th, and the 19th was back to the lows, and then this big move from the bottom of the range all the way to the top of the range, which is the strength card. We had a low on the 23rd, which we have a lowest low on the 23rd, nailed that. We have another lowest low around the 25th, and another one around the 27th. You can see we went like two to three more times there, so we really picked up on that. And then we go back into there was opportunity on the 28th in the midst of a decline to open up a long position, and it looks like that's paying off right now because based on that last candlestick for today, we've actually broken through, and that would be the science card there. This is an important price level. So it looks like we're possibly in the midst of a breakout here. If like the day closes above, I'd say we're probably in a breakout here, guys. It looks like we have a higher price level or the same high in February. So this was a significantly accurate reading, guys. In the midst of the decline there on the 1st, you could open up a long position and closed it for a day trade and made money. On the 3rd, early in the day, you would have opened up a short position to close on the 4th or the 5th. That would have made a solid amount of gain. On the 5th, there was actually two ways you could have played the 5th. Either way, if you opened up a short or a long, you would have made money on the long here. You would have made money on the short here on the 7th. And notice how there's a cash out opportunity on the 8th, right? Why? Because this is a pretty wild day, and there was possibility that you could have closed at a much lower price level if you waited until the next day. And that's why things like that will advise you when to trade, even though it might seem like there was a better price level. In a lot of cases, if you take human psychology into it and you think about what you would have done, it makes a lot of sense. This is a super accurate reading, guys. Super accurate reading. So if you're interested in the paid version where you get all of the trade information we talk about in the paid version, that's like the timing to the day of the best trades, as well as the chart behavior that we see for entry and exit to look out for as far as into and out of those trades. All of that information in the paid version, that's on a monthly basis, also on a multi-month trade kind of standpoint, a multi-year kind of standpoint. We talk about any cross-reading congruencies that we might see between the monthlies and the yearly, and kind of fit into the greater scheme of things. All of that in the paid version. As well as any price level information and the comparative performance. Great way to support the channel. You get it here under our services, SO Meta Posts. Scroll down to monthly subscription, click here to order. You're going for the SHIB coin reading. But if you're interested in the paid version of any of these other tickers as well, I highly recommend the all paid version because you get access to all of these ticker symbols in crypto. You just click here to subscribe. It's the most popular subscription on the channel, and really these are the core foundation of financial support for the channel. I know the name of everybody that goes ahead and does it. It's a great way to get my attention. With that said, thank you so much everybody that does that. Blessings to all my angel investors. Let's get back into it. Yeah, so there's a pretty sharp drop there on the 13th into that trough, and then that mixed behavior on the 5th with a prominent peak in it on the 16th. So the 15th is a decline, incline, and then a decline. So in the incline, we probably see that peak, and then we decline again, and out of that decline, there's a rally on the 16th. Rally ends somewhere around the 16th, 17th at a crest that we sell off from, and we break down to and through support. We do a U-shaped reversal below that support, come back and reuse it as support, and it looks like the trough is towards the end of the day on the 17th. Big move out of that trough that'll really stand out on a multi-day scale there into the 18th, and then out of that big move to the upside, another decline into a trough midday on the 19th. The decline into that trough on the 19th does end with a fast sudden move higher. Most likely a very prominent trough here on the 19th and or the 20th. The 20th highlights an important support level on a one-year chart scale. Usually it can be relied upon, not in all cases, but usually can be relied upon. And it looks like we probably rotate sideways along that support, which is likely a revisiting of the trough on the 19th. We rotate sideways into the 21st, and then after establishing support with that sideways rotation, there's a big move to the upside on a multi-day scale, taking us into a peak on the cusp of the 21st, 22nd. Sharp drop through multiple support levels on the 22nd, but it's mixed because we have another peak on the cusp of the 22nd, 23rd, and then we go into another prominent trough on the 23rd. That's followed by a notable move higher on the 24th, and we likely create a new local high on a 1 month chart there. On the 24th, when we break through resistance, we stay above it briefly, and we break back down through it shortly thereafter with the full retracement. In the case of this reading, I would not consider this abundance card to be a highest high. And we have this resistance level, this price level that's highlighted on the 25th. Usually there's a lot of decline off of it after we flatten out around the price level of resistance. There's a decline off of it, and it looks like that decline is pretty mixed here, guys. Really, really tough. There's prominent peaks on the 26th, and there's also a decline to revisit an important support level on a multi-day scale there on the 26th. Then we have a failed attempt to break through key resistance, and it looks like we're going to break through it here later in the day on the 26th, followed by a decline through multiple supports. It taking us into a trough here at the end of the day on the 27th, excuse me. And then out of that trough, this is where that really big move at the end of the month from the bottom of a range to the top of a range is most likely to take place. We go from out of that failed attempt to break through resistance, followed by decline through key support. It's probably the support that we met on the 26th. We probably decline through momentarily on the 27th. And then out of that trough, big move to the upside. Trade opportunity at the trough, and then a big move to the upside, a rally that increases with momentum moving forward in time on the 28th. Into overbought crest or peak around the end of the day on the 28th and or on the 29th. We decline off of that through multiple supports, and then more rallying after that decline on the 30th to another possible high, prominent high on a 1 month scale, and then an unexpected move to the upside on the 31st. So really, really big move there, guys. A lot of ground covered price-wise at the end of the month. Cross-rate incongruencies put the highs for the month of March here at the end of the month based on their placement. Both of those two cards, cross-rate incongruencies and high kind of correlators towards the end of the month here. So I think we probably have a highest high here on the 1st. It's possible we revisit it on the 5th, 6th, but it's more likely that it's a lower high. And then on the 9th, another prominent peak, probably not as high. Unlikely that this 15th cross-rate incongruency is a highest high. Unlikely, because I don't necessarily see a high for the year there. But I still don't think it takes place there. It's probably here, guys, first thing in the month. And then it's possible that we come back all the way to the highest highs here at the end of the month. I think that we probably come back to the highest high in the early part of April is my sense, rather than at the end of the month here. But there is a really big move that starts to the upside at the end of the month that takes us into it. As far as lowest lows, most likely around the 19th, 20th, again around the 23rd, and then there is the possibility of it again around the 26th, 27th, but the strongest probable location of the lowest lows on the 19th, 20th, and the 23rd. With that said, that's a paid version of SHIB coin for March 2024. Thank you so much for supporting the channel and watching. Make sure to like this video if you like it, and if you haven't subscribed, please do so. It really helps out the channel. Most importantly, make sure to follow that rule of karma. Without people doing that, I wouldn't be putting out this content. There just wouldn't be any point in me putting out all this content. It would just, there's a reason for it. So please follow along like that 3% of people that actually do. Those blessed souls. And blessings to all my angel investors. I'll see you guys on the next one. Stay tuned if you got the paid version. This abundance card indicating likely a highest high. We see it, or a highest high on a multi-day scale thus far, or a multi-year scale thus far, highest high. We see correlation to it here in October, around October's high. But there is some possibility that we see it more than once. And with that said, there's very, very likely a highest high thus far here in March, in the earlier part of March. I think it's probably going to be, actually, it could be the 9th. It's like either the 5th, 6th, or the 9th. And they may be the same price levels as the 1st, 2nd. In a lot of cases, the 1st, 2nd is the highest price level. But remember, we're seeing a rally to key resistance and then a decline with consecutively lower spikes up on the way down. Okay, so in early April, it looks like we have a decline. And also the sneak preview indicates a low, like a significant low and a decline offering opportunity to open up a long position. Close it short. So I would look for opportunity here around the end of the month of March. I probably accumulate a partial long here at an overbought crest on the 28th when we rally into a key resistance on the multi-day scale at near overbought crest here around the 28th, 29th. And then if we go higher on the 30th, I would add to that short. If we go higher still on the 31st, I would add to that short. And we might go higher a little bit in the beginning of the month. But I would be setting myself up for this devil card, which is a notable decline. It's going to take us into what might be a lowest low thus far for the year. Okay, so what I would be looking to do is, this is kind of a tricky trade, guys. But I obviously want to be on the short side for the majority of the month based on the theme card being the strife. So I would probably open up a very modest position of a short position on the 1st, add just a little bit to it on the 2nd if there's a better opportunity. If we see the same high, if we see a higher high on the 5th, 6th, I'd probably double the position, but still it would be partial. If it's the same price level, I'd probably add a modest amount, and then if we see the same price level again on the 9th, I would probably add a little bit more of a short position there. If it's higher, which I doubt, but if it is higher, then I would probably double my position there, and I'd still want to keep it partial because there is one more place where we might see a high here around the 15th. I don't think we're going to, but it's possible. So I would have accumulated a bunch of shorts, right? And then there's this sharp drop here. Yeah, okay, so I want to close out of the short position in the midst of a decline here on the 19th to a key support level on a 1-year chart scale. Somewhere around the 19th, 20th, we should do some rotation sideways along a key support level on a 1-year chart scale at lows. That's where I would close out of the short positions. If I miss that opportunity on the 19th, there's probably another one on the 20th. I wouldn't wait for it. If I miss that opportunity, there might be another one on the 26th, but it's kind of risky because we're getting really close to that big move higher, and this abundance card prior to it could indicate that we move substantially higher between this low and this low, you know what I mean? So you don't want to wait for that, but it might be a possibility there on the 26th because we're revisiting a support level here on a multi-day scale there on the 26th. That was an important support level. You could also start accumulating partial long on the 19th, 20th. If we have a better opportunity on the 23rd, I would say add to it. It's probably the same opportunity though. And then if we have the same opportunity on the 26th, I would say add to it again. And you look to close the long position safest on the 28th in the midst of that rally into a key overbought crest around the end of the day on the 28th or the 29th. Or you could hold it a little bit longer for possibly higher price level on the 30th, or longer still for possible higher price level on the 31st. But the safest bet would be to get out on the 28th and not risk it because the highs are somewhere around this 4-day period. As far as price levels, so we've got a highest high thus far in March, in like the earlier half of March, second to third week of March, sort of. We have a highest high for the year of 2024, which puts it at least here at 0.00001069. But my sense is that it's probably higher, and it looks like it's probably around the same price level as the peak that was formed at the end of 2023. So I'm going to mark that off as a possible, March high. All right, so that's pretty good. So possible highest high thus far for the year of 2024 taking place there around that price level in March. And then we go into lower price levels. It looks like the April lows are similar price level to the January lows. And they're talking about the low we saw it at the very beginning of January right here. And then again here at the end of January. So roughly this price level around here. Well, actually, those will be April lows. So we'll talk about that when we get to April. As far as that goes, so we have the cross-reading congruency for the 1 month or the 1 year highest high card there appearing here, which is what makes me think maybe there's another peak there. We have early March card here, so this should be a pretty significant drop. And then we have like high significators here at the end of the month again as well. But as far as where we are in the grand scheme of things, we're like right on track. The late March card ends up being in late March right here. So that puts us on track for April to be the same way. Right on track with the April cluster. Let's take a look and see Bitcoin's performance versus SHIB in March. Looks like SHIB outperforms Bitcoin. So this move at the end of the month is probably really where the outperformance comes into play because these patterns look really, really similar. With that said, that's the March SHIB reading for 2024. Thank you so much for supporting the channel with the paid version. Without people like yourself, we would not be able to put out this content. Thank you so much for being a huge part of Tarot for Traders and the Investor Profit. Much love goes out to you, and blessings to all my angel investors. You know where to go. You know what to do. We're counting on you. I'll see you on the next one.